Hey, April. Happy New Year. Hey. Excuse my pigtails. I walked in the store today and somebody else had these exact same pigtails. Happy New Year. Come on in, everyone. Come on in. I'm gonna give everyone some time, a little bit of time. Y'all know how I am. I like to get in here and get the business, get you this information, um and let you guys go. It's Tuesday, the day after Monday. So um come on in, come on in. Oh, thank you. They started coming loose, so I just said forget it. I'm in here working. It's tax season. Can't be cute the whole time, all the time. All right, guys, come on in. Say hello. Tell me where you're checking in from. Tell me where you're checking in from. I know you're in down there in Texas. I just talked to my colleague down there last night. It was her birthday yesterday. And everyone is up and running. It is officially tax season, guys. Tax season started yesterday, January 3rd, but it started yesterday, um, officially for the IRS. The business returns were starting to be accepted. And when I say business returns, I'm speaking of S Corps and partnership returns earlier this month. But typically, when we talk about tax season, we speak to the 1040 person. A majority of people filing taxes have Schedule C, Schedule E businesses that pass through to that 1040. So come on in so we can discuss what is happening for tax season 20, tax year 2022, but tax season 2023. Y'all know we're always behind. The first thing I want to discuss, and I can't see if you're commenting on Facebook or YouTube. Last time I saw comments afterwards, so forgive me. All the time, I don't always see the comments. I don't know why until after the fact sometimes. So I am live also on the Transparent Accountant. For those who don't know me, I am Tawana Bryan Osborne. I am an accountant and tax strategist based out of Columbia, South Carolina. We offer full service tax and accounting services here in our office, which is consulting, business setups, tax preparation. Keep in mind, and CFO services, keep it in mind that tax planning is so necessary for you to prepare for tax season and ensuring that you're saving and you're on the right track to save and pay the least amount of taxes possible. For that to happen, though, we want to make sure that we have solid books, which means our bookkeeping is being done. So those are the services that we offer, because we want to make sure that we help you with all around service. We want to build relationships with you, and we want you to be able to build long-term wealth. And we can't do that by penny pinching. The old saying, in order to make money, we got to spend some money. So that should be one of the first things that you do in your business. That should be one of the first things that you actually outsource in your business. All right. So before I get started with what's new or what's changed for tax season, let's talk about your documents and your forms. And I know most of my Schedule C or my business owners or rental property owners, you're not running to get your taxes done a lot of times, and that's okay. But we want to make sure we collect all of our documents for those people that are W-2 wage earners only, because I want to talk to everyone. Before for those W-2 wage earners, make sure that you're getting all of your documents. If you're not on my email list, get on my email list. I sent the checklist out. That checklist will help you get started to ensure that you have all your documents. However, one of the ways that you can start determining what documents you need so that you don't miss anything is look at your last year's tax records. What listings did you have of W-2s that were filed? Did you change jobs? Know what new jobs you've had. Did you add any new accounts? The other thing you want to look at is digital forms. Banks are now sending most of their forms digitally. A lot of companies, student loan, a lot of these companies now, employers, are having digital W-2s. They're not sending those out anymore like they used to. It's just not happening. And as long as they provide it to you, they're not getting penalized. So make sure you're looking for all your documents. I know I did an amendment for someone that missed interest from their, they got a letter for interest from their bank. And the IRS sent them a letter and said, hey, you missed some income here, and they totally didn't even think about it. The bank probably never sent anything out. And when they logged into their account, they were able to find that they had a 1099 INT for interest. Remember, if you took retirement funds out during the year, 1099R retirement, and it'll be coded accordingly based on whether it's taxable or not. In some cases, it's not taxable. But make sure that you have all your documents, and then double check everything to make sure there are no errors on your forms. If there are errors, then go back to whomever issued that form and get those corrected. 1099-Cs for cancellation of debt, and you've disputed that debt. Yeah, that's income if that creditor sends that out. So keep that in mind. A lot of people are starting to see that 1099-Cs come out. Now, last year was a big boom. The last couple of years have been a big boom with people with business, but it doesn't mean that everyone was paying their creditors. There's a lot of credit repair and a lot of disputing going on. But I do know that a lot of creditors are now, once they see you're disputing those accounts, they're sending it out as a 1099-C. However, there are some exceptions to the rule for having to claim that as income. One is filing bankruptcy. If you file bankruptcy, that's a way of a workaround. And then there's some others that strategies that can be looked at with your tax professional. So make sure you ask them, how can I avoid having to pay taxes on this money if I truly know that I don't owe this money, or I believe that I don't owe this money? What are the workarounds? So let's talk about a couple of things. 1099-K. So remember, there was this big hoopla that Zelle and Cash App and everybody, once you made $600 for those, then we're going to send you a 1099-K. Y'all can talk to me, y'all can talk to me. They were going to send a 1099-K out. Well, that's been put on hold. So the threshold is still 200 transactions or $200,000 in transactions. So for a credit card or that type of service. All right. So if you get a 1099-K for $600, don't be alarmed. Don't stress out. Don't freak out. A lot of companies, because it was so late in the game, before they made the decision that we're going to put a halt to this, some people were still, some vendors were sending it out. So don't be alarmed if you did receive that. The standard deduction has increased. So the standard deduction is determined by inflation and by Congress. Each year, they determine exactly how much that standard deduction is going to be. The standard deduction has pretty much literally wiped out people being able to itemize their taxes on their taxes. Years ago, I was seeing a lot of itemization happening. Now I'm not so much, because the standard deduction is so high that people can't itemize on their taxes. However, I recommend that you keep everything. When I say everything, medical bills, taxes that you're paying on, especially if you don't have a business, taxes that you're paying on personal property, your charitable contributions, keep everything and submit it, because if your itemized deductions exceed the standard deduction, then that's the number that you use to reduce your adjusted gross income, thus reducing your taxable income. Okay. So that has changed. The standard deduction has increased. The maximum earned income tax credit for children has increased also, not a whole lot. About if you don't have any children, that threshold actually went down. Okay. And the age actually went back up. So last year we were able to give earned income credit. The last 2 years, we were able to give earned income credit to those people that were 19. I don't know the exact number that it went up to right now, but that age has gone up, as well as if you didn't have children. 2021, it was 1,502 was the maximum, and this year is $560, if that helps you at all with what that looks like for someone with no children. Now, for someone with children, one child, two children, those amounts have gone up a couple $100, well, 100 and some change. All right. So the mileage rate, there was an increase of about 2 cents, a little 2.5 cents, for business miles and medical and moving miles. Remember, moving only applies to those in the military. It no longer applies to just, regular people, up through for the Tax Cuts and Job Act, and that's through 2025. Okay. And then the maximum limits for the Section 179 deduction has increased. For Section 179, it's increased about $30,000, and then for property limits, it's increased about $80,000. We have talked about the 1099-K. What else do we have that's changed? Child care credit rollback. So for child care, and to determine what that allocation was going to be, we were able to use 2019. We no longer can do that. Charitable contributions. So what does that ultimately mean in everything that I'm saying with the changes that have happened? We're not going to see a whole lot of the big deductions that we were seeing in the past. So that means that the tax liability is going to increase. Do not be alarmed. Do not be shocked. We're going to see some increases in your tax liability. Now, 100% of the meal deductibility is still in play, okay? So they're still trying to get these restaurants back thriving. So that is still in play for 100% of the qualified expenses for meals for 2022, but that does not mean going out with girlfriends. And, it has to be a viable business purpose that you're deducting these meals. Mortgage insurance premium deductibility is actually back on the shelf, so we can start claiming that again. With the Tax Cuts and Job Act, it actually eliminated it, but Congress reinstated it. So that's back on in play. That was actually a positive change. A lot of changes just seem to be negative, but they're not necessarily negative. They just gave us a break for the last 2 years. They gave a lot of breaks for the last 2 years. They gave out stimulus money. They were giving out all this money. Now they're ready to recoup. So one of the things that I wanted to talk about with them wanting to recoup is the fact that $80 billion was allocated to the IRS. And what does that mean for our business owners? Okay. So, they put in that Inflation Reduction Act of 2022. And I know y'all are like, Tawana, I could care less about this stuff. I just want somebody to do my taxes. Here's the thing. You got to know what's going on with your business. You got to know what's going on with your taxes. They're yours. Like I said before, when you sign under penalties of perjury, you're signing that you know what's going on with your tax return. And then a lot of times when you get that bottom line number of what you owe or what your refund is, if your refund is less than what it was previously, a lot of times people are upset about those numbers, but you're upset about those numbers because you're not taking the time to understand those numbers, and those numbers apply to you, not just business owners. as individuals. If you are working, you are a W-2 wage earner, then you should know what's going on with your taxes. The additional money that was allocated to the IRS, over $3 billion is being added to taxpayer services. But check this out: $45 billion is being allocated to enforcement. They're trying to recoup the money that was lost. Of course, they're trying to throw that out. However, it has not been thrown out up to this point. So make sure that you are documenting properly. Make sure you're doing your books are in order. Make sure you are keeping proper records. Okay. And the other thing that has gone out the window for this year also is the 100% bonus depreciation that was in play. So that's gone out the window. Like, we're losing so much, but I just want you guys to be prepared for tax season. I want you to be ready for what's to come. If you have not filed your taxes already, I want you to be prepared for what's to come. I'd coined myself the transparent accountant. I've been called the tax preacher because I tend to preach at people about this stuff. Thanks, G. Cole, for that name. I don't know, might stick. But I get on a roll and I get to kind of preaching about it because it's so important that we're doing all the things and that we're serious about it, and not just one time a year, but throughout the year. And we're planning properly and we're allocating things. And here's the other thing. And I just had a call with a potential client. Tax professionals should be in your business. Granted, we are, or your accountant, let's say that. Your accountant should be in your business. We should be asking you everything. So women, you go to the gynecologist, they in your business. They want to know what's going on. You know, men, y'all don't like to go to the doctor, but when you go, they're assessing the situation. In order to do that, they're asking you 50,000 questions. I know me, when I go to the doctor and they're asking me all these questions, it's annoying. We are annoying. We're annoying, but it's your finances. It's that should be the most important thing to you. So the fact that we're asking so many questions is because there's not a one size fits all cookie cutter model. Everyone's situation is different. Don't let anyone make you believe that if you have these standard size homes and all of them are the same and you just pick one, it's not like that, because everyone's tax situation is different. There are different variables in everyone's tax situation. So you want to make sure that if your tax professional is not asking you a lot of questions, or they're not giving you an organizer with a lot of questions and all up in your business, assess whether that's the person for you. Assess whether or not that they're asking enough and digging deep enough, and not that just because they're asking a lot of questions, things won't fall through the cracks sometimes or be missed, or a question might be missed. And the reason I say it may be missed is because the way something is answered may not prompt your professional to ask another question, depending on their level of training. All tax preparers are not the same. Make sure you find one that works with and for you. I know me personally, I don't do a lot of profanity. I don't do profanity. I don't curse. So anymore, I don't curse. And a lot of times I don't like to work with people that has a filthy mouth. I just don't, because I miss the message because you're cursing so much. And so now I'm focused on the cursing, and I know that's not somebody I want to work with. So make sure that your tax professional is a fit for you. Make sure that if you don't like their office hours, or if they have office hours, or you don't like the fact that they are not available at certain times and they have boundaries in place. Some don't, some don't. They'll say, call me 24/7. I have some colleagues that say my clients can call me whenever. I don't work like that. So make sure that your professional is a fit, because that helps the relationship, that helps you with communication. Communication is key when you're doing taxes. Make sure you have someone that you can reach. And sometimes there's situations where you do play phone tag, or you do play kind of tag with reaching each other. Because remember now, this is our busiest season of the year. We have 4 months to make it happen, in a sense. And so most tax professionals have their heads down, and they're working, and they're trying to get through the returns. And we can't be on the phone and working at the same time, because that leaves room for errors as well. So let's I want to just manage expectations. The other thing that I want to say is, I do have the 2 tax organizers that up and running. For my clients, there are no additional costs. There's a small fee attached to the tax organizers, because I did take time to go through them and be able to walk you through your expectations of when your tax professional is asking you certain questions, certain areas, what that means, married filing separate, married filing joint, the benefits and disadvantages of them. The Schedule C and Schedule E will drop definitely this week. My apologies on the delay, but they will drop this week. Had a few days of y'all. I just learned that sinuses could be taken out. I think that's the route. I meet with the doctor next month. I know, transparency, okay? I meet with the doctor next month, because like my sinuses, here we go another year, and it just started like 2 years ago, where I started having sinus issues that are exasperated. So had a few complications. So when my voice isn't right, or I'm not, or I'm not feeling well, I don't like to try to record. I will be recording it in sections, but the basic tax organizer and the tax organizer with itemized deductions is complete. The link is in my bio. You can hop into the BBS store and grab you a copy. The other thing is, we're onboarding. We have office hours Tuesdays and Thursdays from 10 a.m. to 11 a.m. That will help you with onboarding. It will also help you with your tax organizer questions if you are a client of ours. And so those are our designated office hours right now. If we have to increase them, we will. But right now, we're going to start out with the Tuesdays and Thursdays. And we'll start on Thursday of this week. So any of my clients that are onboarding, prepared to onboard, tax appointments are open. Again, everything is in the link in my bio, and that just has the different things that are available to you. But I just want to say, make sure that we are planning and we are preparing ourselves properly for tax season each year. So right now we're doing 2022 taxes. I'm telling you to get prepared for 2023. If you're not tracking your miles, start tracking your miles. Like, it's not too late. Start tracking your miles now. You may not be able to go back. We've lost 24 days. That's it, of 365. So go ahead, start tracking your miles. Make sure you're keeping up with those things. The other thing is, just because you're using the mileage does not mean the actual expenses method is not more appropriate. So don't just use one just because it's the easiest to do. If you have your receipts for oil changes, let's say you're a salesperson and you're out there, you're beating the pavement, my realtors, you're out there beating the pavement, you're showing houses, and now your car needs all these repairs, and you spent more in repairs last year. Use the actual method, but don't not give that double negative, but make sure you give all that information to your preparer, so that we can assess which is most beneficial to you. Because the key is to save you the most in taxes, but we can't save you the most if we don't know what you have and we're not able to assess what you have, and make an informed decision. Okay. So again, I don't like to. Yes, you will be able to replay this live. I typically do not delete the Tax Talk Tuesdays, but this will be available for replay. Didn't have any. I think that's it. Anybody else have any questions? IG, Facebook, YouTube. I don't like to keep you guys long for this anymore. Before, I used to talk over an hour, just because I love educating and I love getting into the taxes and the numbers and everything. But I'm learning that ain't everybody's job. So I'm trying to do better. and keep it at 30 minutes or less, just so it's palatable for those who this isn't necessarily their cup of tea. Y'all continue to tune in for Tax Talk Tuesdays. I'm going to be, like I said, doing some giveaways this tax season. I think I said that on the last live, but I'm going to be doing some giveaways this tax season because my love language is gifts and I like giving stuff away. So I'll be doing some giveaways, and I might do some polls throughout, the season. So make sure you have the notifications on if you're not getting notifications. If you are catching this and we're not linked, you don't follow me at this point, go ahead, hit that follow button on IG. Let's connect on Facebook or YouTube, subscribe, turn your notifications on. And I may just randomly go live because sometimes I just be in the mood to talk to somebody because, yeah, I'm normally there in at the crib by myself. Even though I have a team, other than when we're, working on our trainings and our morning calls, I'm normally in there by myself. So, I'll be needing somebody to talk to sometimes. So I'll hop on live and talk to you guys. I enjoy educating, and I hope you guys get value from what I do give. So on a serious note, I hope that you get value, and if it's anything that you want me to talk about more in depth, don't ever hesitate to say, Tawana, can you discuss this? And if it's something that I need to do a little more digging on or research on, I don't have a problem because that's what I do. So whatever you do, let's say, and I got my Black Chick Travel on here. Say you're a travel agent. Y'all enjoy looking up trips, and I used to be that person, but you enjoy looking up trips, you enjoy looking at destinations and locations, and that's your thing. This isn't what you love to necessarily do. You may do it because of the necessity of keeping your books, but let me do the digging and researching for you and come back with a live with the information for you guys. Okay. You can always book a consultation. Of course, discovery calls are open for those who want something other than tax preparation services, but the tax prep discovery calls are available as well. Okay. For tax specific, for tax season. If you are ready to become a new client and you're ready to get onboarded, just make sure, like I said, hit the link in my bio, and we are here for you. All right. I hope you guys have a great evening, and I will talk with you soon. Good night.